Ms. Hayes. My name is Rolando Reyes, and I'm your tax professional from ILL CPA firm. Thank you for trusting us with your case. We have revised your situation, and based on all the information you have provided us, we believe we have a strong case to protest this penalty. We recently sent you a letter with all the details of this case and a copy of the letter we drafted to the IRS protesting the penalty they're imposing against you. Because of the many aspects involved in this matter, I want to take this time to make a short video explaining the proposed assessment that they described in letter 1153 and form 2751 that you received from the IRS. So in short, letter 1153 is the IRS telling you that they're imposing a penalty against you, specifically the Trust Fund Recovery Penalty, or TFRP. Also, attached was form 2751, which details the amount and tax periods for this deficiency. I want to start by explaining a little bit what TFRP is and why the IRS thinks you're liable for this penalty. The TFRP refers to a tax penalty assessed against any employee who is the responsible person for accounting for a tax and that intentionally fails to pay that tax. That penalty can be any penalty allowed by law plus 100% of the taxes due. In your specific case, that would be the $20,000 for all payroll taxes not remitted to 2018 by Tuba Toothpaste. That's why this penalty has to be taken very seriously, because even though Tuba Toothpaste was responsible for these taxes, the TFRP holds the responsible person in that company personally liable. There are two important factors in determining who the responsible person is for the purposes of this penalty. The first factor is if you're the person responsible for withholding payroll taxes and remitting those taxes to the IRS. A responsible person for this purpose can be an officer of a corporation, a partner, a sole proprietorship, or any employee of any form of business. Even a trustee or an agent over the funds of the business can also be held responsible for this penalty. The second determining component is that not paying taxes was done willfully, meaning that you intentionally try to evade these taxes, or you gave preference to other creditors instead of paying the IRS. This action can be seen as willfully trying to defraud the government, even if no bad motive or evil intent were involved. Something very important to keep in mind is that you could be seen as a responsible person, but if they fail to find you acted willfully, you can still be released from personal liability. In other words, both conditions have to be met. That of being the responsible person for the purposes of this penalty, and that of having acted willfully in failing to remit these taxes. For us to be able to represent you in this case, we will need you to give us a power of attorney, and then we will proceed to write a letter to the IRS protesting your penalty. We will also request a hearing before the appeals office of the IRS to argue your case. The reason we strongly recommend this is because it is possible to settle with the appeals office. If they agree with our views, you can be released from any liability. However, if you ignore this penalty, they will bill you and initiate collection. Now, let me explain a little bit how we intend to argue your case. The Internal Revenue Code and various tax courts will look at a number of factors to identify who the responsible person is within a company. In general, this is going to be the person with authority to decide which creditors get paid and when, IRS included. To support this determination, they will look at who has signed tax return, who has borrowing authority, or who can sign checks. Other factors are the stake in the company, or the ability to hire or fire employees. In your specific case, the CFO title you hold, according to the LLC operating agreement, puts you in charge of accounting and financial affairs of the company. This makes you target for the purpose of this penalty. But based on the facts we know about you, we understand you had no knowledge on any taxes due, no control over the company finances or which creditors to pay, and you had no intention of evading such tax. However, once a person has been identified accountable for the tax, the burden of proving not having committed this violation willfully falls on the taxpayer. Nevertheless, there are very viable reasons to contest this TFRP based on your specific situation. Our first argument is that your CFO title did not accurately reflect your responsibilities within the company. We argue that it was an artificial designation by your parents, and we actually referenced a court case where an officer of a company with the title of president was found not liable because it was not proven that he purposely evaded this tax. Our second argument is your stake in the company. We cite a court case where a majority shareholder with no active involvement in the company was actually found liable. The court's reasoning is that as a majority shareholder, he controlled the board of directors, which in turn controlled management. This technically gave him control over the financial affairs of the company. However, in your case, in Tuba Toothpaste was only 1%. Please note that a person with zero ownership interest can still be responsible depending on other factors like decision-making authority and control over financial affairs. But we will handle these points in other arguments coming up. Another argument we make is in relation to your signature on payroll taxes and your ability to write checks. we sat a court case where the taxpayer, a director of the company, even though he had some control over payroll and writing checks, was found not liable because he had no decision-making authority into which creditors get paid. In this case, the CEO actually admitted he alone had authority to pay these taxes, and in your case, per your description, your parents handled all the money issues and dealt with collection letters from creditors and taxing agencies, like the IRS. We believe we make a strong case in your favor for not being identified as the responsible person for withholding and remitting these amounts to the IRS. If for any reason the appeal conference does not agree with our views, we will have to demonstrate that you did not willfully evade paying this tax. However, because you had no knowledge of the tax deficiency, that would suffice in you having any intention of evading the tax. In some cases, court may say the person acted willfully if the person was being negligent, but we had a handful of reasons to believe that your negligence was not to the extent to establish willfulness. In our protest letter to the IRS, we cite a court case where a taxpayer was found to be the responsible person for the purposes of TFRP. However, the court ultimately decided in his favor because the defendant was unable to disprove the taxpayer's belief that his tax obligations were being fulfilled in a timely fashion. In your case, you were under the belief that your parents were being compliant with the IRS. As you can see, we build a strong case based on what we know about you and establish why you should not be held liable for the taxes not paid by Tuba Toothpaste. If the appeals office fails to release you from this penalty, we will have to take this case to court. We can go to the United States Court of Federal Claims or the United States District Court. Unfortunately, if this is the case, you will have to pay a portion of the liability and then file for a return. Like I said before, we don't want to overwhelm you with all the details, so that's why we send you a letter directly to you, and we also send you the drafted letter that we plan to send to the IRS. Please, as soon as you get back, please review it and let us know if you would like us to proceed with that recommendation. Have a safe trip, and we look forward to working with you. Goodbye.